need motivation and inspiration to get you off the couch and boss up? We've got you covered. Welcome to the Build or Destroy podcast. Self-improvement, education, business, relationships, financial literacy, investing, and doing for self. Let's do this. Here's your host, Anthony Barber Jr., aka The Builder.
What up, though, good people? It's The Builder, once again. And in this episode, or shall I say this series, we're going to be going over the research-based investor. And how this particular style of investor is underrated and essentially overlooked when it comes to market investing and everything. You know, when people think of stock, you know, they put a hyphen on the back end of it and they say stock trading or, you know, stock investing. But most of the time when people think of stock, they think of stock trading, nowadays especially. You know, put money in and I get money back out, you know, like a vending machine. And sadly, that's not really the case. You know, the investor is still alive and well, even though we're overlooked most of the time. And it's not as popular to be considered an investor. Now, some people might say, why is that? Well, I'll tell you. It's because it's boring. It's a very methodical thing to be an investor, you know, because you have to have a healthy relationship with time. You have to be able to analyze the situation, analyze a company, analyze a stock, analyze the market, you know, spot trends before they happen. You know, you're not necessarily psychic, but the better you get at it, you know, it's eerie because you start to see certain things that other people can't see. It's very spooky. It's very spooky to try to explain this, but I'm gonna give it my best shot. So, the research-based investor, right? Like, what's the difference? Some people might say, well, what's the difference between, you know, what is a research-based investor? What's the difference between somebody that's considered a research-based investor and somebody that's a quote-unquote, you know, trader? Well, in my opinion, you know, from my own experience, I've dabbled in, you know, different arenas of investing and different styles of investing over my 11-year career. And one thing I can say for certain is all traders and all investors are not built the same. They're not. And this ties in directly to my mental health series, which is an ongoing series on this, you know, on this podcast that we're going to be putting layers on top of layers and moving and grooving, you know, throughout 2022 and beyond. But how that relates to this is just like the mental aspect of the game has many different layers and rooms and avenues to pursue in order to get that down pat. Investing as a whole is the same way. You have to find your swag. You have to find what works for you. But, and there is a but, you have to develop basics. Just like in anything. Like, I have a son, right? My son's 3. And eventually, you know, He's going to get into sports, in some way, shape, or form, But right now he's starting, jiu-jitsu training. And it might seem simple, but like I've been to his classes and I've seen how methodical and how focus driven his instructors have to be just to keep him aligned and all the other students aligned. And he's not necessarily an easily distracted kid, but he's a kid. He has a young mind, so it's very impressionable. It's very scatterbrained. He's all over the place. Like everything's exciting to him. It's new. Everything's new. And just like when you step into the investment arena, everything is fucking new. Every day of the week, it's new. It's like 50 first dates, man. It's new. It never gets old. That's why people keep coming back, because it never gets old. It's like having a best friend that frustrates the shit out of you sometimes, but you always hang with them. You always can get a word of advice from them. You always can get a lesson, either by getting into bullshit with them or watching them get into bullshit, i.e., watching other people get wrecked or burned on a trade or on a bad investment. It's all types of ways to learn. What does this have to do with research-based investing? Well, research-based investing is an acquired taste. It's not necessarily for everybody, because like fine wine, it has to be worked on constantly. It has to be monitored. It has to be checked. It has to be analyzed and scrutinized. Like you do more self-scrutinization sometimes than you do on the stock. Because one thing that researchers do that I don't want to say average trader, but I'll just say traders do in general, that traders do. One thing that research-based investors do that traders don't particularly do is they write down everything. You see, traders, especially chartists, like real technical based people, they have a guideline. They're very rigid in their belief system, in their ideology, and their thinking. They're very rigid because their system is based on rules. I'm not trying to sound cliche. I'm not trying to sound like Morpheus from the Matrix, but that's kind of the gist. Like, they have a system that's very rigid and it's based on rules. And the reason why a lot of like technical based traders usually function throughout the market very well, and they generally do decent if they can maintain their focus, is because they have a system, they have a rule system in place. They have indicators, they have chart indicators, it's like a matrix. You have your RSI, your relative strength index. You know what I'm saying? You have your MACD, you have your moving averages. You have your different ins and outs that you can use. And I call them ins and outs. There's more technical terms, but I like keeping shit simple. So the ins and outs are basically like the things that you can use to highlight certain traits of the chart and take away other certain things that you might not deem as important. Some people like using Bollinger Bands. They're Bollinger Band nuts. Like they love it. Some people go off of RSI. Like a lot of momentum traders use the RSI because it's a good indicator to gauge if a stock is being oversold or has been oversold for quite some time and is due for a bounce, or if a stock is running hot. Even if it does have, a reason necessarily to run hot, a lot of these guys use these indicators and these variables to help make informed decisions, basically because, in my opinion, they don't necessarily have the emotional intelligence to be self-contained, to be self-controlled, and they rather work on the compound interest principle than the long-term compounding that comes from long-term investing. For example, a lot of people are fine with nickel and diming their way to $1 million. Nothing wrong with that. It might take them 5,000 trades to do it. I do have the time. Everybody has the time, but I don't personally want to use my 24 hours that way, because I feel like it's abusive to my mind and the other various things that I want to do. Like my entrepreneurial goals, my real estate goals, my small business goals, which will turn into bigger business goals. Like, you see what I'm saying? Like, in order for me to be that 5,000 trade to $1 million person, that means I have to literally be actively trading and wrecking my brain over this stock, that stock, and not necessarily the company. I'm focusing only purely on the stock, not on the actual company itself. Whereas as a researcher, I'm focusing on the roots of the tree, not the branches, not the leaves, not the budding of fruit, the early indications of fruit starting to pop up on the vines and the limbs of the branches. Like, I'm not really concerned with that, because I feel like by the time I show up to a tree and it's bearing fruit, even if that fruit is succulent and it's great and it's about to fall into my lap, yeah, I can possibly scalp it and take some of the low-hanging fruit for myself and move it over into something else. Whereas I like to invest in seeds. I like to invest in good soil. That's what a research person is about. That's what a research-based investor is about. They're about finding those companies before they become redwoods, before they become those giant dinosaur trees. That's what we're about. I want to invest before anybody gives a shit. I want to invest before anybody cares. I want to invest before people start believing in it. You see what I'm saying? I want to nurture it. I want to watch it grow. I'm interested in watching it grow, because that's the true indicator for me. What good is it showing up to a tree that's already, been picked through? Essentially, it's already been picked on. All the good fruit pretty much has been harvested already. It might be some fruit still hanging, but it's nowhere near as plentiful as it would have been as if I would have been able to take advantage of it over the years. Both of these philosophies aren't wrong. But what I'm trying to stress and get through to you is, don't shun or look down on time, because that, as a research-based investor, you form a relationship, or shall I say, you have to form a relationship with time. You have to get familiar with time. You have to be cool with time. You have to make friends with time. Remember, because you're investing in seeds. You're not investing in an already, fruitful tree necessarily that could be ready to harvest at any minute, i.e. being cut down, deforestation. Maybe the sector that it's in just blows up. Maybe the sector that it's in just, comes under mass scrutiny from an outside source. And it just turns the whole sector upside down. Look at what happened, with this virus situation. A lot of markets, a lot of sectors are not going to bounce back from this. They're getting hit extremely hard. They might still function, but they have broken limbs. They have broken feet, broken legs. They can't walk. They're not going to dance the same. They'll never dance again. They might be able to walk to the bus stop. They might be able to drive a car, but they're never going to dance again. You understand? Like the travel industry took a massive blow. Why? Because, money makes the world go around, right? And so do airplanes, so do cruise ships, But once the world actually had to stop moving, once freedom of movement was actually a detriment to people, at least in their minds, then public sentiment basically crushed that industry. It drove it down. It said, I don't want to fly a plane because I'm scared. All of a sudden, planes became a scary thing, whereas a month prior, planes were the thing. Like that's how you got around. That's how you went on vacation. That's where you visited family abroad. That's where you worked abroad. Like, now all of a sudden people are pivoting, quitting jobs, working, remotely from home. You're writing a dissertation or a presentation, sitting on your couch, eating a Hot Pocket with your boxers on in the middle of a Zoom meeting with a polo shirt on, unbeknownst to your coworkers. You have no pants on. Like the world literally shifted. So where video conferencing technology wasn't even really the talk of the town, wasn't even really being thought of, all of a sudden it became the thing. It became the thing because it all of a sudden it became the thing that was utilized. It had the most utility. That was the thing that kept the business going, not airlines, not being able to fly to Singapore. I don't need to fly to Singapore now. I can just do a Zoom call in the middle of damn, bumfuck Massachusetts or something. No offense to anybody living in Massachusetts. Shout out to Massachusetts. But I'm just using that as an example. You're in the middle of nowhere, essentially, in your apartment or your home, and you're having that business meeting in Singapore with your Singapore colleagues, but you're at home. You don't have to physically be there. They can see you, they can hear you, everything. You might as well be in the room. Now, only thing that's missing out of that equation is, natural body language, but you can still pick up on subtle body language watching somebody on a camera. So good enough. It kept the lights on. It kept the business going. So airlines went down. Video conferencing technology all of a sudden exploded. One market got destroyed. Another one actually grew. Now, the people that saw the long-term potential in video conferencing and things of this nature, that invested heavily in Zoom and platforms that were similar to Zoom and audio and conferencing technologies and things of that nature, they're sitting pretty right now. Their portfolios are looking like the Incredible Hulk right now. Where people that had an old school mentality of, oh, this is too big to fail. People always need to travel. They always need to travel. What happens when traveling becomes a detriment? Now, all of a sudden, it's not priority, is it? Now, all of a sudden, it's a problem. See what I'm saying? So, going back to being a researcher, most people, they don't even know where to start, which is what makes it seem, and I'm gonna use that term loosely, it makes it seem lame. Because it seems like almost like a magic school or some Harry Potter thing, like a Hogwarts type situation. Like, oh, you have to know where to look, you have to know where to go, and I don't have time for all that. It's like, wait a minute, so you'll wreck your brain trying to learn chart patterns, RSI indicators, Bollinger Bands, invest in hundreds or if not thousands of dollars in technology and platforms that supposedly help you, and AI trading bots and all this stuff. You'll do all of this. You'll do all of that. You'll invest all that overhead, right? But you will frown on a research-based person because they actually put, it's hands-on, man. It's a hands-on way of investing. It's a hands-on style. It's rugged. It's dirty. It's methodical. It gives you headaches. You stay up late. You got to put time in. See that word again? It's time. Not that, charting traders don't put time in. What I'm trying to get you to understand and what I'm trying to stress to you is it's different, man. It's different. Most people don't even know how to start the due diligence phase, which is what I'm gonna really touch on right now. The due diligence phase is literally the beginning. It's the beginning. So some people say, well, how do you find these plays that you invest in? Like, how do you know what companies are good? How do you vet them? Like, how do you know? Like I don't want to make the wrong choice. I don't want to. It's like, okay, so lesson one would be, and this is my opinion. This is a purely opinionated podcast. Take everything with a grain of salt, like I always say. Use it or don't use it. I'm literally just speaking my mind. And anybody that I can help with this information, I feel like I did my job. But going back to what I said, how do I find a company? How do I find a company to invest in? Well, I invest in things that I am into, for one, and not necessarily because it's popular, but because I see certain market trends. I see certain shifts in the market based on global shifts. You see, I'm not constrained to thinking inside of a bubble, inside of my country, inside of my state, inside of my home, inside of my skin. I don't constrain myself. I live on a planet. So everything that moves and grooves on this dirty ball it's like a ripple effect. If something happens over in one country, another country's most likely going to feel it. Especially if they do business with that country on any level. Some type of after effect is going to happen. It's only a matter of time. That being said, for example, like one of my largest holdings, as far as my small caps go, a company that I'm really looking forward to, watch grow, over the next couple of years is Humble. All right. And I know, a lot of people are going to say, well, you've been in Humble since, day one, and you're just, super bullish on it because you like it. And it's like, dude, it's beyond me liking it. It's like, if you did the research on the company, you would see why I'm so bullish on it. But just to give you my simple example of how I found it or why I invested in it. One, I know for a fact crypto is the future. Let me ask you a question. Have you ever used a debit or a credit card? The answer is probably yeah. Do you know somebody that uses a debit or credit card or has ever used a debit or credit card? Answer is probably going to be yes. Have you ever purchased anything online? eBay, Amazon, Etsy, anything. Facebook Marketplace. Have you ever ordered anything online? 9 times out of 10, the answer is yes. Now, when you purchase those things, or when you witness somebody else purchasing those things or those items or what have you, do you remember them exchanging any paper fiat currency for the actual transaction? 100% of the time, the answer is going to be no. There was no fiat exchanged between parties for the goods and services. Okay? So get it out of your mind that crypto isn't a thing, because everybody around the world has been slowly conditioned and indoctrinated into a cashless society. Like most people don't even carry cash on them. I guarantee you ask 10 people, do they carry cash on them? Maybe one, maybe 2 out of the 10 will have money on them. You know, and most of the time it'll be because they'll have it for a specific reason, because they're going to make an immediate purchase with that money, or they have an actual reason why they have to purchase something with cash. But if they can avoid it, most likely they're going to have a debit or credit card. So before I even found Humble, I've been on the hunt for DeFi companies. And for anybody that doesn't know, DeFi is decentralized finance, basically disruptive financing. You know, financing that's going to, you know, challenge the banks. I don't really see it crippling the banks. If anything, I see the banks just buying in because for one, they have the capital to do so. They have a lot of upfront capital that they can put to use, a lot of money on the books that they can put to use and just gobble up a bunch of these startup companies and then roll them under their umbrella. And then all of a sudden, boom, they're a blockchain company too. So let's not get it twisted. But I digress. I was on the hunt for, you know, DeFi companies, blockchain companies, innovative companies, crypto companies. And it didn't matter. Crypto exchanges, that's a must. People are going to have ways of getting crypto. Just like ATMs. You see ATMs popping up all over the place, right? That's not a coincidence. You know, a lot of people frown at that because they know what it means. Not because it hurts their feelings to see a Bitcoin ATM next to a traditional ATM. No, that's not the point. They frown because they're just like, shit. Like, I did not know it was going to creep up on me like this. This is really happening. Yes, it's happening. It's happening. Only difference is research-based investors knew it was happening over a decade ago. They seen it coming. They just didn't know when it was hitting. That's the whole cool part about investing in things before they become big. You get to watch it grow. So by the time it actually turns into something to where it's tangible and it's starting to take shape and form and starting to have legs and eyes and ears and move and make sounds, like, and everybody's like, oh, wow, congratulations. It's like, yeah, no need, because I already knew what this was. So I'm on the lookout for those types of companies. And I come across a Forbes article, you know, highlighting, you know, the top startups to watch. Now, I don't levy that much, I should say, clout to Forbes in particular. But hey, Forbes has been around for a while. And, you know, when they highlight something, I'm at least going to take note, and I'm going to read into it, you know, especially if it's something new that isn't really talked about a lot. You know, you can usually find some gems hidden in there. And I read about Humble, and one thing that caught my eye was the fact that, you know, they were mentioned in the UN 2030 agenda. Now, I was already familiar with that agenda because I was reading it. I was reading up on it, which is it basically outlines the global reshifting. It's like a global reshifting plan. You know, it has all these guidelines in place on what the world is supposed to look like by 2030. You know, this is per the UN, you know, the United Nations, you know what I'm saying? So these are basically guidelines that all the nations that are a part of the UN subsequently agreed upon, that they will try to make steadfast attempts to, you know, bring to fruition. You know, they want these things to happen, you know, sustainable energy and, you know, renewed power grids, you know, stable power grids, drinking water, medical services, new forms of payment, you know, getting rid of fraud and, you know, collusion and, you know, in financial sector and trading and investing and, you know, bringing transparency. You know, it's like it's so many different layers to that onion. But the fact that Humble was mentioned in that, and it's a startup, I dug a little bit deeper. You know, and one thing that I always start with the head of the snake. I hate to use that analogy because, you know, I'm not really calling anybody a snake, but I usually start with the head of the snake. Who's in charge? Who's the boss? Who's the CEO? Okay. I start there. So I found that the CEO was Brian Foote. I said, okay, he looked familiar at first. I said, man, I thought I saw this guy. So I went right to YouTube, typed in Brian Foote, and what do you know? There was a couple YouTubers talking about Digibyte. There was a couple YouTubers talking about, a conference between, Block 30 Labs and Digibyte. Like they have, a relationship together, a partnership going on. So, I went and checked it out. And Brian was talking at a conference about, what his plans were, for Block 30 and everything like that, and how they wanted to have these index funds, these ETXs, and they wanted to get them listed, and they wanted to tokenize, everything from music to real estate, and how essentially everything could be tokenized. And a light bulb went off, and I said, he's fucking right. Like, yeah, that's the future. Everything being tokenized, everything being, being an asset. It's amazing the things that's going on right now, right? And one thing that stood out today in particular, at the time of me recording this, was a press release from Humble. At the time of me doing this video, where Trevor, I don't want to butcher his last name, but Trevor Etienne, who is a high school stud, basically, is going to commemorate his college selection process with interactive Humble NFT collection and signed merchandise and a meet and greet. Like, and I know a lot of people are like, what are you talking about? It's like, this dude is in high school, okay? Like, the NFL recently came up with a rule where, athletes could essentially make money now for the first time, without penalty. Like, this is a big deal. Like, they can literally make money off of their image now. Like, do you understand what I'm saying? Like, they can tokenize themselves. They can brand themselves. This dude is in high school. He's about to go to college. He's not even in the NFL yet. But he's literally partnering with Humble, a blockchain company, to do NFTs to commemorate his college signing. Like, this is literally groundbreaking stuff. Because now he's setting the bar. He's setting the standard where other athletes are going to be watching and looking at him like, wow, like, I can do that now. You know what I'm saying? Imagine if he goes on to, like, even greater things. Like, how much that NFT is going to be worth if he goes on to have a stellar career. Nothing's guaranteed, but my point is, like, he has massive potential to do so. And he's literally capitalizing on that potential at an early age. And he's doing that through, via the blockchain. You see what I'm saying? And this is after a whole year of me being invested in Humble, a year and some change, actually, because I was already invested in Humble the year before that, the earlier in the year before the merger happened. I already had shares in TSMP, because it was a shell corporation. And one thing I know about shell corporations is usually they have that somebody will either take custodial of them, and then a merger will happen, or they get bought out, things of that nature. In this case, George Sharp took custodialship of it. So I said, okay, well, merger's definitely happening, eventually. I just don't know who. But that part slipped my mind until I literally put two and two together once the actual company was announced that was the company getting, the merger. That was the merger candidate. And that's when the Forbes article popped up in my head. I literally read the Forbes article before all of this. So I already was aware. This has nothing to do with any chart. Okay? I didn't care about the TSMP chart. It was literally a shell corporation, and it was in trips. If anybody doesn't know, trips is like, you have 3 zeros in front of, you have the decimal, then 3 zeros, and then the number. So it was literally 0004 when I bought into it. I'm not going to disclose how many shares I bought, but trust me, I bought a significant amount of shares for very little money, literally less than a penny on a dollar. Okay? Less than a penny. Like this is the power of, investing in seeds, investing in things, that are under the soil, putting your money in good soil. Once the merger happened, I knew it was only a matter of time, and this goes back to my word, time. It was only a matter of time before the rest of the market woke up to what I already knew about. And many other people. You fast forward to now, we're in December 2021, and, they're cutting, NFT deals with, high school athletes that are going, D1. They just did a music concert with man, it's amazing. Like, they just did a music concert in Vegas with Nick Carter from the Backstreet Boys. Like, he's a part of Humble. Like, the talent they have, the advisors they have. I mean, the app, they have the ETXs, it's just so much going on underneath the surface. This is what I mean about the root system. Researchers invest in the seeds, and we watch it and we watch it. And as long as those roots are going deeper and going deeper and going deeper, then the investment is sound. Like, I don't have to worry about the day-to-day. I don't have to stress myself out about the day-to-day because I didn't invest for the day-to-day. Now, yeah, did I take profit from 0004 to $1.97? Did I make money? Yes. But did I make sure I had such a large position that I could literally afford to stay on house money for the inevitable future and let my seed turn into a mighty tree? Yep. That's another advantage of a researcher. Patience, poise under pressure. Being able to walk away from the fucking computer, not worrying about red days because your investment is sound. You're not worried. You're not putting your rent money into the market and then getting mad at the market as if the market did something wrong to you when you can't pay your bills. Okay? I didn't invest, with the intention on being able to pay a bill with this money. That I put the money in there knowing that I could literally lose it all. It had no way of knowing. The market could have crashed. Anything could have happened, but that wasn't the point. The point was it was a sound investment. So I was prepared for the best or the worst. But in the back of my mind, it was the best decision because I'm investing for the future. I'm finding seeds early with good soil, good companies. I start with the head of the snake, the CEO, and I work my way down. Who's on his staff? Who is he hiring? Who has he worked with? Who's his connections? Who's his industry connects? Who does he know? What's his background? Is it actually in the very thing that he's selling? Is he a facilitator? Does he just have a good eye for talent? Is he a change agent? Like, what type of leader is he? Is he reckless with his mouth? Is he a pig? Like, does he go on Twitter rants? arguing with potential investors and people on the day-to-day when he should be working? Or is his nose to the grindstone, busting his ass to make it happen? I invest in hardworking, businessmen and businesswomen. Because at the end of the day, the stock market is a vehicle. I'm not about to invest in the fucking hoopty. And I'm not necessarily interested in investing in a sports car. Not necessarily. Okay? I want to invest in an efficient vehicle. One that is popular, it could be popular, but I'm all about the internals. What does the engine look like? What's that transmission work? What is it looking like? What is it working? How's it working? What's the longevity of this machine? Does it break down every 5 minutes when I turn the key? Or can I drive and just keep driving on it? Does it have an oil leak? Is it susceptible to electrical problems? Like, see what I'm saying? Like, I vet these companies. People like me, we vet companies. We're anal retentive when it comes to being overly analytical. We're just overly. We want to know everything. We're in everybody's business. Because our money is on the line. See, traders can pretend to be biased, like, oh, I'm not emotionally involved. I just play the chart. Well, you know what, homie, that's cool. That's cool, man. If you can, nickel and dime your way to $1 million, cool. But like I always say, those traders that are like monsters, and it's a few of them, they're out there, that they've literally traded so long and they've refined their way of doing it. Remember, I told you, everybody has their own method to their madness. There's certain traders that find their swag and they're able to see certain things that other traders can't. That's what makes them badasses. They're better. They're better at seeing things than other people. This is a fact. And they try to pawn off that shit like they can just, I'm going to teach you how I look at everything. Dude, everybody doesn't look at everything the same. This is why, as a researcher, it's kind of disheartening, because it's like, dude, like, research is something that everybody can do. It's like a basic principle that everybody should know how to do, and only maybe 5 to 10% of people really put the grind in to get the basics down, to build a strong foundation, a strong investment foundation, knowing where to look, knowing what questions to ask. It's like a calculator. If you don't put the right sequencing of numbers in, then it's not going to spit out the answer you want. You can type all you want. You can throw the calculator against the wall. You can yell at it. It's not going to give you the answer that you want if you don't put the right sequencing of numbers in. That's just like with the research. You have to know where to look. You have to know how to look. You have to know what rocks to turn over. You have to know these things. And most people, quiet as kept, they don't want to. Their priorities are fucked up. They don't want to do the work. That's why they try to shit on it like it's nothing. Like, oh, well, I'm not doing all that. These researchers and you're just a pumper. It's like, so I'm a pumper because I provide steady information, consistent information. That makes me a pumper. Okay. I think it's funny, though, that a lot of influencers, especially like the YouTube crowd, especially, how, they'll tell people, man, I got this great play. I got this great stock. I got these great stocks to look at, and they're going to run this many percent, and it's going to run that many percent. And it's like, yeah, that's cool, bro. It's like, but most of the time when they run, they're already burnt out. And when I say they burnt out, it's like they've missed out. Your followers already missed out on like 1,000 to 5,000% gains before you tell them about it. Whereas like a person like me, I tell them about the shit before it becomes appealing, so they shit on it. I'll tell them about it when it's even below a penny, because I'm not really I never talk about price. I'm just like, dude, this company's doing this. This is who they're working with. These are their partners. This is what they're doing. This is the catalyst. Make the decision for yourself. And instead of reading through all of my material, all my data, all my research, all the information that I'm presenting, because it's thick, because it's daunting to a lot of people, because it's boring to a lot of people, they'd rather just wait until it goes to like 3-4 cents before they start believing in it. And they're like, oh wow, it went to 3 cents and it held its gains. It's like, yeah, but myself and others told you about this before it even went to a penny. It's like 5 cents now. And now it's like going to cost you more to buy in. And then you might actually be buying into a top at that point. It might be due for a pullback by the time the influencer gets their hands on you and they tell you about, how great it is. Let me just say, Google is your friend. Like the calculator analogy I used, some time ago. You have to tell the machine what you want, and you have to be very, very specific. So when you're researching a company, let's say it's a biomed company, and they're working on solutions for the V shot, the CV shot, or the CV virus, I should say. Maybe your first Google search could be for any patents that the CEO or maybe a member of his scientific, research staff, maybe they have some intellectual property that might be, very good to know about, something that can give them a competitive advantage over, let's say, a bigger entity. Or it might create a scenario where that larger entity or that larger pharmaceutical company with plenty of financial money set aside, might actually start eyeing this company as a potential buyout candidate. It's all angles. It's how you look at it. It's different angles to this game. Another thing, YouTube is your friend also. A lot of people are like, oh, you use YouTube to do research? Yeah, it's like a calculator. It just depends on how and what you search for. I don't look at other like YouTubers or influencers videos necessarily. I look at research-based videos that are topic specific to what I'm looking for. So for example, like in the case of central bank digital currency, or CBDCs, you can either Google that, what is a CBDC, and then put crypto next to it or blockchain, and you're going to get all these different websites and articles and everything. Start there, start research, start reading. Like you have to be a student. And I know a lot of people live life and they can't wait to like get out of high school. Like school is like the worst thing in their lives. Like they hate school, they dread school. But it's like, what you don't understand is, and what you have to overstand is that knowledge is 360 degrees, meaning that it's all around you. It's everywhere. You never stop learning. That's the whole premise of this whole thing, is to never stop learning. You learn something new every day, especially if you're paying attention. You're going to learn something new. You're going to get some perspective on something. So why not do it with purpose? Why not actually put your best foot forward and actually actively learn? There's nothing wrong with being an active learner. You don't want to learn things the hard way, do you? You want to keep bumping your head. You want to keep getting pulled into these bad trades because of a bunch of hype, because somebody told you that this is going to be this or this is going. Even if it is, like, you should be able to have enough knowledge to where when some crazy person or some ultra popular person says, hey, I think this is going to do X, you should have the know-how to be able to call bullshit on it, or to be able to vet it for yourself and say, okay, let me vet this and see if it's anything to this hype monster. Or is it all just, smoke and mirrors? Is he trying to take advantage of his popularity or her popularity and yank and pull these people in the same direction to prop the stock price up temporarily, do a rug pull, and then say, hey guys, that's just the name of the game, or hey guys, that's just what happens, you can't get mad at me. It's like they can in a way, but they, you're right, they can't. And that's my thing. It's like, I want to take away the bullshit excuses. I want people to stop fucking complaining. I want people to stop blaming the market, blaming other people necessarily for their decisions at the end of the day. If you take away all your excuses, now you have none. Do you understand? Like, you have none. You've literally exhausted every type of angle and scenario, to the best of your ability is what I'm saying. But you've exhausted it. You've taken the time to exhaust every last bit of data that you could. This is not a get rich quick scheme. These people that are good at swing trading, that goes back to what I said. They are methodical. They literally found their niche. They found their swag in the game. It's like, swing traders, I know some swing traders that literally they can take one look at a chart, and they'll know where the bottom is. They'll look at the 3 month, the 6 month. They'll be like, okay, and then they'll compartmentalize it, and shrink it down and go all the way down to the weekly. And then they'll say, yep, this is a bottom right here. Yep, I know exactly where my entry point is. But you don't know that. You're not a swing trader. You haven't been swing trading for years like this person has. You don't have the experience. The only way to take, all that experience and then literally bottle it up and compartmentalize it for yourself and try to close that experience gap is to do research. You need to make research second nature. You need to, that's where your basics are. If you have strong fundamental basics, then yeah, it can help you jump in and out of different arenas because you know exactly how to study. You know exactly how to bring your knowledge up to a level that at least, at the end of the day, you can be well-rounded. You might not be a specialist at anything, but if you're well-rounded, you know how to make money. You know how to bring in capital. You know how to make profit. Okay, this is what I'm trying to get you to understand and overstand. Following somebody into a trade and it not working out for you isn't that person's fault. It's your fault for being a follower in the first place. That's your fucking fault. Like, you're supposed to be able to hear shit and discern for yourself if it's bullshit or not. Not just take everything and then run with it. Like, oh yeah, I trust. You don't, dude. Why are you walking around trusting anybody? You should be trusting your own logic. That's why you need to study. Even if you can't say, well, I don't have the time. Okay, I don't want to sound crazy or like disgusting or anything, but like, hey, I know plenty of people that watch really silly videos while they're in the restroom. You know what I'm saying? I don't have to go into any type of grotesque details or anything, but let's just keep it real. Like, I know a lot of people that bullshit on their phone while they're in the restroom. So instead of bullshitting, why don't you actually pull up a video, put your wireless headphones in and listen to some shit that actually might help you. Read an article while you're in there, an actual tangible article on it, based on an investment that you're looking at or that you're already in. Get some knowledge, get some understanding. There's nothing wrong with that. There's no shame in that. There's no shame in being knowledgeable. What the hell? Like, some of the most successful people, some of the most richest people that I hear everybody looking up to and quoting and putting memes out. These people research, man. These people study. They know their shit. And you're sitting here dumb as a rock. Like, yeah, admiring this person. How you going to admire somebody that researches and studies, but you don't do it yourself. That's insane. Utilize the what is principle. The what is principle. The what is principle is the calculator principle. Going back again, ask YouTube what is. Go to the search bar, type in what is, and then fill in the blank with what you're looking for. If it's a CBDC, what is CBDCs? And you'll get a bunch of actual tangible videos breaking down what a central bank digital currency is. Then you can switch it up and say, what is the use of a CBDC? Then you can say who uses CBDCs? And then you will find all these global news articles on things of that nature. You can do that for damn near anything. It's like you don't waste time watching bullshit. Like, especially if you're in the business of making money. If you want to make money, you gotta be serious. This isn't like a joke. This isn't. I know they call the stock market a casino. It's not a fucking casino. Those are just jokes that rich people say to you to make fun of you because you're the dumb money. That's why they call you dumb money, because you're easily impressed by bullshit, by theatrics. Like, that's why they call you dumb money. I want to kill that narrative. You should want to kill it too. You should want to gain knowledge. You should want to gain knowledge at the end of the day. Have a firm grasp on what the hell you're invested into. You know what I'm saying? Do you understand what I'm saying? Like, you kill two birds with one stone. Utilizing a what if principle, that's what happens. You get a firm grasp on what the fuck you're invested in, and you gain knowledge. It's literally two birds with one stone. Most try to time the market, and they use win. They're win type people. WHEN. When is this stock going to move? When is this stock going to drop? When is this stock going to sell off? Like, they're always concerned with the win. Those are the people that are like literally have all that nervous tension on the back of their neck. They're too busy glued to their computer, and they're sweating bullets because they're like, man, I'm overextended in this trade. I shouldn't have bought when I did. It's like you got all these fucked up feelings going on because you weren't methodical about it. You literally were impulsive. You cannot be impulsive with your money, man. Researchers study the why. One cool thing about studying the why something moves the way it moves, irregardless of up and down. Like, the why. If you know the why, you know how to act accordingly. You know how to move accordingly. You know how to put your money in there accordingly. You know how to scale in. You know how to actually, when you should or why you should buy a big block trade. You know why. You're not trying to time anything because you have a good relationship with time. You have a firm grasp on time. You and time are buddies. So you're not nervous. You're not rushed. You're not anxious. You become dangerous at the end of the day. Another thing, knowing where to start. A lot of people ask me this. Where to start? And where do I go first? Like I said, Google's your friend. YouTube, Reddit. Jump into these Discords. You don't have to be an asshole. Ask questions. Don't be afraid to ask. There's no such thing as a dumb question. If somebody is trying to make you feel dumb, you should know that already. It's like they don't know shit, okay? And they're actually mad that you had the balls to ask that so-called dumb question. That's all that is. That's how you need to take it, in my opinion. If you ask an actual intelligent question and you're looking for information and somebody's refusing to help you, then they're hating. They're hateful as hell. They're mad that they never asked that question back in the day when they should have asked it. And they're jaded because they might have lost a shit ton of money over the years, or over the days, or over the months, or however long they've been doing it. Don't matter. They're mad. And so they try to give you grief for actually, showing some type of initiative. You have to be able to ignore that type of shit. You know, you have Twitter. Like, we literally live in an information age, people. So there is no excuses anymore. Ask the questions. That's all you have to do. The right people will answer you. And the thing about it is, don't take every answer at face value. Research the answer they give you, so that you can call proper bullshit on it, or you can actually take it and put it in your back pocket. Like, yep, that's a good one. Yep, I'm gonna use that one. That's a good one. Yep, actually, yeah, that's true. I think that's spot on. Yep, I'm gonna use that. Oh, nope, that's bullshit. Nope, I'm discarding that. He's just talking shit. She's just talking shit. Nope, sorry. But ask the question. Do not be ashamed to learn. You want to be dangerous in this game. You really want to be dangerous. So learn the fundamentals. And I call them fundamentals because it's fun once you learn the boring shit, okay? It becomes fun, effortless. Learning how to actually read a 10K, how to read a 10Q, you know, the significance of an 8K, the insignificance of an 8K. Financial reports. Oh, man, I don't know how to do that. I don't know how to read those. Okay, tell you what, go to Google. Like I said, Google's your friend. And ask the question, hey Google, how do I read a 10K properly? Or reword it. What's the proper way to read a 10K? And guess what's going to pop up? Certain resources like investor.gov, Investopedia. You know, the two places that a lot of people never mention, never tell you to go, never tell you to utilize, as if like the information is like hieroglyphics or something. It's so simple. Like, you just have to fucking do the work and read. Taking some time away from the hype, falling back from the hype will do you some good to actually get your feet up under you. I'm saying this with all sincerity. Like, do yourself a favor and get your damn feet up under you first, before you go out here and start hitting your head and walking around in the dark, falling off of cliffs, getting mad at the world because you broke your back on the fall. And you didn't even have to step that way. If you would have knew where to step, you wouldn't have fell. And if you would have fell, you wouldn't have fell the way you fell. You would have just had a couple scrapes and nicks and bruises. You wouldn't be walking around here paralyzed or financially paralyzed, I should say, and have to go to rehab and rehab yourself back, to your old self again. Like, I've seen it too many times, man. It's not cool. Stop running out in traffic, getting wrecked. I say this with all sincerity. This is not a joke. Like, I actually give a shit. Like, your success is up to you, but I give a shit because the thing about it, I got to operate in the market around a bunch of people that are constantly being called dumb. And it's like, that doesn't have to be the case. Like, do you know how powerful the market would be if it had at least 30%, 40% of the retail investors with some actual knowledge under them? That's a problem. That's a problem for Wall Street, man. That's a problem for the big dogs. There's a reason why hedge funds slap you around. It's a reason for that. You don't know. You don't know what the hell you're doing. So they can easily keep their thumb on you. Is that what you want? I didn't think so. So, if you play OTC, specifically, go to otcmarkets.com. And they're not paying me for none of that. I don't have to promote them. I'm just telling you some of the resources that I use. They're not paying me for none of this. It's just not sponsored. I'm just giving you some free game. Go to otcmarket.com. Type in the stock that you're looking at or looking to get into. Start going through the different tabs. Look at the news, read the press releases, read the financial reports. It gives you basic information. And then you might you're going to have to jump around from different website to website, go to YouTube, and then pedal back, go to Twitter, go to Discord, ask a few questions. Like, you're a student at the end of the day. This is college. Only difference is, instead of you paying the college money, the college is paying you money. The more you learn, the more you earn. Later.
Thanks for listening to the Build or Destroy podcast with your host, Anthony Barber Jr., aka The Builder. We hope you enjoyed our deep dive into all the tips and tricks you can use to boss your life up. If you're interested in expanding your mind and reaching your definition of freedom and how these ideas and views can be applied in the real world, tap in with us next week. As always, you can head over to www.builderslsb.com to cop some motivation, dope merch, and sign up to our email list. And don't forget to check out all the links and resources in the show notes. That's all for this episode, folks. And as always, boss up instead of laying down.